Hello, welcome back to Cointelegraph's Chain Reaction live show here on X. My name is Kieran, I'm your host, and today I'm joined by Swan Bitcoin CEO Corey Clipstein. Corey, how you doing? That's a good signal to introduce.
Yeah, glad to have finally met you in person in Vegas a couple of months ago, and now we're on opposite sides of the world again, so good for us.
Yeah, absolutely. And when we were in Vegas, we were talking around price. I think it was around, mid-70s or around that mark, and now everyone's having a bit of a freak out.
Annoyed at the low price back then, right?
And now we're below 60 and everyone's wondering what's going on. Yeah. So what is going on, Corey?
So look, let me preface this with something that I've been reminding people of over and over again. Okay. We all get really annoyed when we read the Wall Street Journal talking about some company or some asset that we know a lot about, and they claim that there's some reason that the price is moving up or down, and you know that it's not true and that they're just grasping at straws and trying to create a narrative. So just remember, in the Bitcoin space in particular, narrative follows price. Price does not follow narrative. So when you get a bunch of TradFi people and bankers asking well, what's the new narrative that's going to make Bitcoin go up again? They're actually asking you for a new narrative that they can go sell some Bitcoin or some ETF or something, some Bitcoin-related stock to their clients. They're actually looking for a narrative that sounds good, that will work for them. But that's not how it works. The signal is something like one of these charts that you see floating around the last couple of weeks, pointing out that we're basically at an all-time high of BTC held in addresses of long-term holders. So whether you look at it for Bitcoin sitting in addresses where it hasn't moved for 6 or more months or 12 or more months, either way, you're basically at an all-time high. And that's marked cycle lows historically. Now, obviously, past performance is no indication of future results, and this is not financial advice. And my advice is not to trade this thing and just to buy it every day like I have been for 6+ years. And so I do think that it's a one-time decision asset that you just kind of tithe into, like you would save into a retirement account or paying off your mortgage or something like that. That really is the best approach that I think people should be using for Bitcoin accumulation in the long term. That said, this is people freaking out, and maybe there's one final flush here. It does feel like the bull market was pulled way forward. It does feel like there's a chance that for the first time ever we don't see an absolute bottom in December like clockwork, that maybe we could for once break out of these stupid 4-year cycle memes with lines on charts and everybody thinking that Bitcoin is magic. And it's not. It's magic internet money, but the price is not magic. So yeah, I would love to see us put in a low, sometime here and start to climb up and not have to wait for fricking December like we did in 18 and 22. And 14, 18, and 22 was the low. Each of those times was in December of those cycles. So I don't want to churn sideways or down for another 6 months, that's for sure. And I don't think it's in the cards. I think we kind of blew off the top. The bull market came early with the ETF pump in Q1 of 2024. That was before the halving, and we were already at 73. I just think it was early. Even the high last year was October, so it was already a couple months pulled forward versus previous cycles. So I'm hopeful that we put in a bottom here pretty soon and can start a little climb up and maybe get a pump in the fall and be on with our merry way. And maybe someday this thing won't trade like a juvenile and can just be a random walk upward forever. That would be nice.
I mean, people are in different boats right now, and I want to know what boat you're in, because some people are saying, it could go down 240, and I think at this point it's all a big speculative ball. What's going to actually happen, no one knows. But, from what you're seeing now and the long-term holders that you were pointing to before, I mean, do you see us going down into the high 40s, low 50s, or do you see now potentially that, we're going to maybe come close now to this bottom that everyone's hoping for?
Look, everyone's favorite meme coin, Bitcoin, sometimes trades like a meme stock, and the meme on the chart is that there was a lot of volume that traded around 53, and so there's a lot of price memory, and so if there's one final flush, that's probably where it goes and tries to hunt that liquidity, whatever the heck that means. And but again, if you are thinking of buying some Bitcoin, whether you're thinking of establishing a position because it looks cheap here, or backing up the truck, selling something else, buying some Bitcoin because you actually are a real believer, I promise you it's going to be a lot harder to catch a falling knife. Like the night that it crashes, are you going to be ready to buy it at, 53,021? Are you really going to be there with your big bid? Or is it better to just like dollar cost average into this thing and, split your purchase over, 5 weeks or whatever and just, automate the buy? Or just buy every day like I do and buy the whole curve. You always crush it buying bear markets with DCA, dollar cost averaging. So that's what I highly recommend. If you were going to see one final flush, it does feel like you just might have, a bunch of cascading liquidations. I think there are a lot of leverage longs on the books right now that are typically easy to hunt. But I also just don't. Am I allowed to swear on this one? I'm not going to anyway. I'm practicing. The kids are home. It's time to break. So I don't give a darn.
I actually don't know. I don't know what the rules are.
Kieran. I just don't give a darn.
Well, I think there's one last one on price, then we're going to move on to more important stuff as well, Corey, because, I think when we spoke in Vegas, we did put a bit of a probability number. I think it was around 25% of what your thoughts were around Bitcoin reclaiming that all-time high again. Now that we are at this
going
price
down.
Yeah.
I'd say, yeah, you're right. I think I did say 25, so that was a couple of months ago, and we've only seen further price deterioration. I'm probably in the kind of like maybe 10 to 15% chance of seeing an all-time high. Like something really exogenous would have to happen. And I don't think we know what that is. That would cause a doubling of the Bitcoin price in the next six months and 5 days. I don't know what that is that's in the cards, and so it would have to be something I'm not forecasting.
Now,
but I do think it's really likely next year. Like definitely over 50% for me next year.
Like a lot of people are putting so much focus into price as well, but there is a lot of exciting things that are happening outside price too, and especially within the industry. So are you able to tell us what you're particularly excited around within Bitcoin right now, price aside and all the low sentiment that's around it?
Yeah. Well, interestingly, so I really love greed-driven narratives, but sometimes fear-driven narratives drive a lot of business. And I will tell you that right now, a lot of our conversations and a lot of what's coming our way is about people wanting to own real on-chain Bitcoin and not paper Bitcoin. And that goes for stocks. It also very much goes for ETFs. And I think it's this recent rash of news and legislation in multiple jurisdictions that really just kind of kicked off 2 weeks ago. I happened to be in London last week when they passed the social media ban for all folks under 16. And then, of course, require you to age verify by tying your ID to your social media accounts to be able to access them. That's a huge deal. That is tying everyone's online presence to their actual identity, which basically gets rid of anonymous postings. And, look, it's always in every society throughout the ages, there's always been a trade-off of, safety, and particularly like the last 50, 60 years, it's always like keep the kids safe versus freedom. And you have to decide where you are on that. This is what the Second Amendment in the U.S. boils down to with the right to bear arms. It's always a safety versus freedom argument. Free speech is the same way. If you want to support free speech for political dissidents, you also have to support free speech for Nazis, which sucks. There's always two sides to it. And, you are seeing a grand encroachment on behalf of the nanny states around the world saying we don't want VPNs. That passed in a U.S. state earlier this week. Utah, a rather large and rich state in the western U.S., passed a VPN ban, which is crazy. And now you're seeing the wildly accelerated timeline on the digital euro coming out of the G7. So it looks like they'll be speeding toward having every EU citizen or user of the euro on a single ledger that they have the keys to, and they can block your transaction, and they can censor you, and they can come get your stuff, and they will know every single thing that you spend all the time, and that's the goal. Of course, to protect you from the baddies, right? But really, it's about being able to tax you and censor you. There's a little bit of a pro of like protecting against the baddies, and there's this massive con that you are basically stepping right into the pod in the matrix, and they're just going to farm you forever, basically, because you're using government money. You live in a government town, just like you used to live in a company town and have to spend company scrip at the company store where the prices were high, and you basically labor 100 hours a week, but end up saving nothing because it's all rigged and they're just farming you. That's basically what these systems turn into. So I think there has just been a huge rise in reaction to that very quickly. It's something that I'm starting to spend a lot of time thinking about, writing about. I think this concept of a sovereignty multiple for an asset like Bitcoin, where how much more is your Bitcoin that you have self-custody of worth versus assets that are inside the system. And, I live in the West where things are pretty safe, and I pretty much trust the system and don't think that I'm going to get got or they're going to come after me or anything like that. I live in the open, etc. Nevertheless, if I look at my actual activity over the last 5 years, it's very clear that I put at least a 50% premium on real on-chain Bitcoin, and that I would prefer to own $100 worth of Bitcoin versus $150 worth of something else. And that's not about price appreciation, by the way, or my expectations of Bitcoin's increasing purchasing power. It's actually my preference to own that asset outside the system. And I think it's a lot higher in some places. Like in Europe, it should be at least 2x. Obviously, if you're in like Lebanon, Turkey, Argentina, China, it could be 10x or more, no problem. But I think that concept really encapsulates what's going on. Bitcoin is freedom money, sovereign human, all of that.
And do you think as well, because I guess for a while now, Bitcoiners have been pushing that, inside the system and what's going on, especially around, their rights being taken away. Do you think there's just going to be a light bulb moment where, enough of these things just go on that it just becomes obvious that Bitcoin is the trade to go, or do you still think that that's still quite a while away? Because, that argument's been going on for some time now, and I guess people that are in Bitcoin know really well that that's why, people are backing Bitcoin. But it seems like, from the widespread adoption point of view, that maybe there's still a bit of time to go there.
I think I have a little bit of a myopic view because I'm in the U.S., and we always have the opportunity to play jurisdictional arbitrage and just change states. So when California gets too extractive, people just pick up and they move to Texas and they move to Florida. And presumably now a lot of people from Illinois will do the same thing because they've just enacted a Bitcoin and crypto only wealth tax, basically, which hopefully will get struck down very quickly. But it came out of left field and again was one of these things that's just like, wow, they really are just like coming for your money and they're kind of shameless about it. So the encroaching Leviathan and Panopticon and socialism, Marxism, all of that, just kind of like, maybe it's in its death throes because it felt like it was kind of in, like there's been a reversal the last 4 or 5 years, post-COVID and, at least people waking up to what's been going on. But it does seem like there's still plenty of momentum behind the folks that would like to put you completely under their thumb. So, I think if I were in a jurisdiction where you couldn't just kind of move states, you'd have to really think about it. You'd have to think, I think a lot of people will be thinking about changing countries if their country starts to suck, but it's not always an opportunity that's available to everyone. You have to have some pretty good resources and a willingness to leave your friends and family, at least physically, which sucks. But, exiting the system is another way to do that. And it's always harder to do that when the clamps actually come down. It's a lot easier to prepare for it in advance and pick up a healthy chunk of your portfolio being in real on-chain Bitcoin is a good idea. On our side, this trend has led to us launching a new product that we got in market a couple of weeks ago called RBX. So it's you want to check it out. It's for US only, and it's swan.com/RBX. It's the real Bitcoin exchange, and basically what that means is you can trade a Bitcoin ETF for real on-chain Bitcoin in a tax-advantaged way. So not financial advice, check with your advisor, but the way it's been working for me and all of our private clients that have run through it is we've been able to carry our cost basis forward and not pay cap gains tax on the trade from an ETF. So it's not a big deal really for anybody that bought the new ETFs, but for people that had GBTC from 10 years ago, it's a huge deal. Not only are you trapped at 1.5% AUM fee in that asset, but you also have some pretty big cap gains if you bought a long time ago. So that's been probably the biggest new product from us in a long time, and it's just kind of flying off the shelves since we launched a couple weeks ago. And it's just amazingly perfectly timed for the moment, because right now is when people are thinking a lot about, actually owning their own assets and not having to ask for permission to be able to move it and spend it and sell it.
Yeah, absolutely. And can you give us a little bit of an insight as well into the Swan Bitcoin clients right now, and I guess what their thoughts and kind of what you're seeing between this cycle and last cycle and the differences in how they're approaching Bitcoin? Are they more knowledgeable now, I guess, seeing the cycles and the ups and downs compared to, are they're just more confident that, okay, it's all part of the swings and roundabouts of this asset class as well? Or are you seeing more interest in sell-offs too?
Yeah. So, I mean, our client base, I think because we put out a lot of content and we adhere to journalistic standards, probably because of my background and training. And so, I basically make everybody else, you have to label an opinion, and you can't say a fact unless you have the data to back it up. And, so it's really all about signal and not noise. And we don't promote fake price models, and we don't tell our clients that the dollar is going to go way more hyperinflation next year. Like we don't do any of these kind of, I'd say, like dumb marketing schemes that a lot of people in the Bitcoin space typically promote. And I think we end up recruiting a client, you hire your clients based on how you present yourselves. And so we end up with a very sophisticated, very intelligent clientele. It tends to be way more high net worth. So most of the business at Swan, probably 80% of it is actually through our private client business, where they actually have a rep and they have somebody to talk to. And these people are sophisticated, they're wealthy, and they tend to see Bitcoin price being down as Bitcoin on sale. And so, I don't know if you remember February, I think the price dropped like 30% in 10 days at the end of January and early February. About half our revenue now is actually recurring revenue, but transaction revenue is still big. And February was our biggest transaction revenue month in company history. And then June is going to be pretty close. So these price drops basically cause our clients are not going to freak out. They're not over leveraged. We don't do, we'll fulfill an asset-backed loan through a partner, but we don't encourage leverage, so nobody's getting stopped out and margin called at Swan. And yeah, they tend to back up the truck when the price goes down. And, we basically just see a ton of buy volume whenever the price goes down. I don't like it when it stays down for like 6 months. I want to see it come back and see some signs of life. But, we always have a good month or two after price drops.
And can you tell us then how a rep works within, Swan Bitcoin? If somebody has somebody, is it somebody advising them, or is it just more somebody that's just there to help them kind of facilitate trades?
I'll be honest with you, it's a lot of just education about Bitcoin is probably the biggest thing. And a lot of times people have questions about their particular setup. They want to know how to put it into a trust, or, how to think about putting it into this entity versus that entity, and, maybe tax loss harvesting for their personal taxes versus, maybe a company tax bill, things like that. So it's just kind of, once you narrow it down to saying like, hey, I'm going to be a firm that's focused on just this asset, you can expand into a lot more. You get through that, you open the aperture, and then you expand into so many different things. And so we have, 4 different types of custody. Obviously, a lot of our clients just buy it, automatically withdraw it, and that's fine. We also have, supported self-custody. So you have all your keys, but you still have somebody to talk to. Or you have collaborative custody with Swan Vault, and that's a 2 out of 3 setup where the client has 2. We have 1 as a backup. And then we have fully delegated custody, Swan Safe, which is where your coins are with Bakkt or BitGo, and it's in an individual account, and you can see it on the ledger, and it's an OCC chartered bank, and et cetera. And then we're building, and should have out by the end of the year, maybe Q1, will be the last one on the custody spectrum, basically the risk spectrum, which is going to be called, well, actually I shouldn't say what it's called because then my PR team will kill me. But anyway, it's multi-institutional custody, so it's 3 keys split across 3 companies. So you share one with Swan, with biometrics, and then there's another one with another company, and another one with a third, and there's intense security around that. That will be the most secure way for people that share Bitcoin. So a family or a company, that will be the most secure way that you can store Bitcoin.
Amazing. Now, I want to talk to you about Bitcoin treasury companies as well, because, 2025, that was the hot topic. Everyone was talking around it, the buzzword as well. And now, obviously, the price is where it's at, and it's dragging around that point as well. So where do you see this whole playbook model going now over the coming months?
So I still see a use case for adding a little bit of leverage to in a stock. It does make sense to actively manage a leveraged Bitcoin equity. which is the right term for this. Bitcoin treasury company doesn't mean much because that could be anybody that has Bitcoin in their treasury, like Tesla or MassMutual or SpaceX or something like that. I think this actively managed Bitcoin treasury, where the point of it is to try to get like 1.15 or 1.2x exposure to Bitcoin that compounds year over year, and 10 years later you have 2 or 3 times as much Bitcoin per share. That still objectively makes sense. I think what people don't realize is how hard it is to achieve perpetual leverage. Mm-hmm. And I will say, like, privately, I don't speak on this all that much, but I think privately I kind of thought that maybe there was a bit of alchemy with the stretch and SATA style of perpetual preferred. And, I think we've obviously seen that there's a lot of risk, operational risk, leverage risk, management risk, on and on and on. And the market clearly is requiring higher yields than what they were offering. And that's why you've seen the price of STRC come down to like $80. Basically, just what that means is you take the 11.5% yield, basically divide it by 0.8, you get 14.5, and that's where the market is pricing that. It's saying, hey, this isn't just, a junk bond, kind of high yield debt. This is more like mezzanine debt. I want something along the lines of like, lending to a single hotel under construction. Right. Something like that mid-teens level. This is kind of a distressed company type of, and the reason that it's demanding that is because it appears to be highly correlated to Bitcoin price. It's highly concentrated in one security, so this isn't like a basket of debt trading for 14.5. It's actually just one company. And I think there probably is something to, whether it matters or not, people are used to lending to companies and governments that have cash flow coming from it, and so just having it collateralized by an asset with no cash flow, at minimum makes people nervous. And for sure, there are people out there that, don't have a belief that Bitcoin will inevitably rise in purchasing power over the long haul, and they may be in and out of this trade and be completely right because but have the wrong thesis. They may be wrong about it in the long term, but still make a lot of money by getting in and out of the trade. And so there's a lot of that going on too. And these are smart Wall Street guys, and they'll rationalize it however they want to, and they're still going to be right, even though their thesis is wrong. They're right on these short-term trades. So there's only 2 companies that actually have the structure set up to be able to do this. Everybody else is subpar, not actively managing, don't have perpetual leverage baked in. And this is really just tranching. There's nothing new about this. You can take any bond, let's say, that has cash flow, and let's say it was, because you have the principal and you have the interest. So let's say there was a bond that was paying 8% and had 100% principal. You can always tranche that and say, hey, I'll give you a senior tranche for the old ladies that are already retired, and you can have 6%, but with your principal guaranteed. Yeah. And we're going to take that money that you pay us, and we're going to basically create an equity tranche that's levered up a little bit by your cash, and they get the excess interest, but they also get they have to suck up the volatility of the principal. So they eat the principal risk. And that's essentially what they tried to set up with Strategy, is they turned, MSTR into the equity tranche and tried to create so it's the junior tranche, and they tried to create a senior tranche with STRC. Does that make sense? Right, yeah, I got you. So that was supposed to be, and it was marketed essentially as, principal protected. It's not, and that's what broke. And, they were guessing at what the market, and they were trying to govern the market to accept the 11% yield, I think starting at 9.5 and then ticking it up. Now it's 11.5, but the market today at least is pricing it at 14.5. So it didn't think that the team's guess at what yield would be required there was enough, especially in a Bitcoin bear market. Now, will that change in the future? Absolutely. Bitcoin zooms up. I think you'll see yield compress, and it won't be SOFR plus 1,000 bips. It'll be, plus 500 again, and on your merry way. But that's basically what's at play, is that these things, there is no magic way to just have perpetual leverage. You always are, when you're levered up, your levels get hunted. You will always have people doing looping leverage in TradFi and DeFi. So it's not just the DeFi bros. They're actually a pretty small part of the story. So far. But yeah, I'm getting a little echo here, but people took this, basically risk-free yield that we've heard of so many times in the space and levered up like crazy, and when you lever up, you get hunted, especially when the positions are known, and all correlations go to one when one entity is under distress, as we've seen time and time again. I mean, this was the risk that I started talking about in May of, it looks, unfortunately, like it would be fragile to something like what happened with long-term capital management, where sure, on paper, you have this diverse book that should protect you. The problem is the street knows all your positions and all your correlations go to one because you get hunted if you look weak. And I think that's where we're at, where basically every single security that's linked to strategy gets hunted basically at the same time when Bitcoin is going down. Will it survive? Yeah. Will it have a whipsaw effect? Probably. I don't trade it and I don't own the stock, but if you are a strategy bull and, you realize, hey, yes, this is actively managed. Yes, they have to do smart things. Yes, you have to trust Saylor and Sharish and CJ to do a good job. Will you possibly outperform Bitcoin in a bull market? Yeah. I mean, it's got leverage on it. That's what it's supposed to do. So it probably does, but this is the downside of it.
Absolutely. And so looking ahead then, Corey, over the next few years before we wrap up, by 2030, what are you most bullish about Bitcoin?
I mean, I think we just have to digest the institutionalization of Bitcoin into Wall Street and ETFs and all these things. I think they came, 4 or 5 years earlier than I expected. And I do think that we'd be in a better spot if we actually had another 4 or 5 years of education. And, I think there was a good separation of Bitcoin from crypto that kind of culminated late 2023, where there was kind of like a 7-year war of $100 billion of altcoin VC money marketing better Bitcoins, and they lost. And it would have been nice to just have a few more years before Bitcoin was just put into portfolios of people that don't understand it at all and treat it as a risk-on asset and sell it, with paper hands whenever they get scared, by anything. So, look, I think, that was, I guess, what's the opposite of silver lining? I don't know. It's it's good the ETFs passed. They passed much earlier than the market was really ready for, and they got Bitcoin in the hands of lots of traders and institutions and retail that don't understand what they own and don't appreciate what they own, and they have paper hands and they sell like crazy, and they also rotated, straight out of Bitcoin into the next hot thing as soon as AI kind of came through with a new hot money theme. They all plowed into that. So I think that we have had a slowing for sure. Bitcoin adoption always marches forward because it has, a near zero churn rate. But people that get into Bitcoin basically don't churn out. Once you understand it, you're like, oh yeah, shit, that's better. I just go twice. I have to do a bunch of jumping jacks when my kid sees this. And that's really it. Look, I guess that was the brown lining on the cloud, is that a bunch of people bought Bitcoin price exposure without understanding what they own, and they're very paper-handed. So, some of them stick though, right? And that's the cool thing. And that is, I don't look a gift horse in the mouth. The ETFs have been a great top of funnel for our business. I'd say 60 to 75% of our new clients the last year already had some price exposure through an ETF. You've got Larry Fink and Abby Johnson and the whole Wall Street marketing machine, mostly telling the truth about Bitcoin. Their marketing's pretty spot on for the most part. They just sell an inferior product. And it's easy to poach their customers and get them into real Bitcoin. And they tend to come to us once they actually read something about the real thing or come across a show like this. They'll consider maybe I should actually take advantage of the properties of this incredibly unique new form of money and custody it myself, or at least own the real thing that I could withdraw.
Absolutely. And, you just mentioned a final point there, Corey, around the AI rotation. A lot of people in the industry do anticipate that that's going to reverse just as quickly as it did into AI, back out into Bitcoin and more broadly the crypto market. Are you on the same page with that as well? Do you see a kind of quick reversal happening once the hype goes out around there, or do you think that, all the stuff that is going on in AI right now, that it is going to hold on to that?
So what I want to happen is what you just said. What I fear might happen is because 75% of GDP growth was basically like AI infrastructure spend so far this year in the U.S. I just fear that it basically drags everything down, and then from a new base, it's kind of a more even playing field. So I don't necessarily see. I'd say get used to it. It's not going anywhere, and there will be a lot of AI everything for quite a while going forward. It's unbelievable technology. It's the third thing in a row that we've changed the name of, but big data just merged and became machine learning, and I did all the machine learning startups 15 years ago, and ML just became AI, and it just means more computing power, and being able to do cool shit with it. So, it's a spectacular technology. I love it. We're all benefiting from it, and it ain't going anywhere. But does it feel a little overheated? I worry that it does, and I don't think that people selling AI related stocks automatically means that capital flows into Bitcoin. I wouldn't trade that. You're better off buying the whole curve, as I always say, and just seeing what happens. But yeah, inevitably the shine will come off of that trade, especially when it has its first big pullback and the Mag 7 has a retrenchment and Nvidia is like, God forbid, worth 3 trillion instead of 5 trillion or something. Which would still be fine for Jensen and crew. I think they do re-rate some of these stocks 20 to 40% down at some point, but I don't know from what level. That could be from a higher level than here. Again, I don't trade those either. I just buy and hold everything. So yeah, I think in the long run, obviously, like the level of interest in AI is like much higher than Bitcoin right now, and at some point it will be at a normal state. It's definitely kind of euphoria level in AI right now.
Awesome. Thanks so much, Corey. I really appreciate your time joining us on Chain Reaction as well.
You're one of my favorite crypto journalists, Kieran.
Oh, that is a big compliment. That's a quote I'm using everywhere. You're one of my favorite CEOs, Corey, as well. So, mate, well, I appreciate your time, man, and enjoy the rest of your day.
Thanks, Kieran. Bye.